you so very much,
Lucky
Madam
you.
Chair. The American economy is heavily leveraged on the success of artificial intelligence. And this is an issue that I'm very interested in, been engaging and talking to folks in the industry and folks outside of the industry, various stakeholders. According to a Bloomberg analysis, AI spending most recently climbed to about 8% of the U.S. gross domestic product, driving the country's economic growth. Chair Warsh, you have long been bullish on AI. However, up to now, despite investors betting big on them, none of the major AI models have been meaningfully profitable. What are the consequences to our economy if none of these companies ever become profitable?
So if they were to disappoint investors, I think the capital markets would dry up for them and some of that capital investment would be curtailed.
I guess that's one way of putting it. I guess I'm getting at where ordinary folks are in the midst of that. The markets, behind the markets are real people who have retirement savings and who are trying to make their present as well as their future work. American retirement accounts are increasingly tied to AI. And so there's the human issue. Driven by massive increases in the stock prices of chip and AI companies, you might talk about the current markets in a way it's tall and narrow. Let's imagine if we are in an AI bubble. What would happen to our economy and more specifically Americans' retirement savings if that bubble popped?
So I think it's a fair question, Senator. I take it seriously. I'm not in the business of providing a Wall Street newsletter, but I'll say broadly to your question about the effects on the economy. Booms and busts do not help the real economy, and they don't make the central bank's job easier. What the central bank is trying to achieve is price stability, full employment, all in the context of financial stability. On the question of these AI companies, certainly the surge in their investment and the surge in their valuations is notable. But I'll also note one other thing, Senator. Over the course of the last couple of months, we've seen the market cap, both of the public companies and of private companies, under some pressure. At the overall indices, we do seem to see a broadening out. Now, why is that? Because earnings now for the last several quarters more broadly are moving up. I don't want to suggest that that should give us any complacency, but what the Fed's looking for is economic strength to broaden and the inflation that we talked about earlier to become more narrow.
So I'd be worried about a massive economic slowdown. You know, the impact of Wall Street on Main Street, and I'd be worried about job losses. Stock prices tumbling would mean Americans could not retire as planned. And I don't want to see taxpayers holding the bag should this AI bubble pop. I'm not against AI. AI is not going anywhere. Right. It has both promise and peril. I just want us to be thinking critically about this from all angles. Earlier this month, you announced a new task force to assess the effect of AI on productivity and jobs. The three individuals you chose for the task force are tech executives who have directly worked for or with AI labs, all three of them. Yes or no, will the Fed include anyone on this task force with an alternative viewpoint on AI? For example, anyone who represents the workers whose lives may be upended by increased adoption of AI tools and technology.
So, Senator, it's a fair question. As I mentioned to your colleague a few moments ago, what I'd say is one of the people on those task forces is an academic. Now, I don't want to suggest that the academic is representing some
You don't want to suggest that the academic is being academic.
I don't want to suggest that, but this isn't a faculty lounge discussion. What I do want to suggest is that academics' work has spent a lot of time talking about prior technology shocks and the displacement that it has on labor. The assurance I can give you is that these three people on that task force, like the other task forces, they're not the deciders. You're talking to one of the deciders.
Right.
The 19 of us around the FOMC with a breadth of backgrounds and interest, we're going to decide what we think of their conclusions.
Yeah, as a decision maker, I always want various viewpoints. I certainly have nothing against an academic expertise. I think that's important, and it's too often ignored in some of the appointments that we've seen around here lately. But here's my problem: Americans are worried about what AI will
Senator,
mean
your
for
time
the
is
economy.
up.
I'm wrapping up, sir, and I'm worried that this viewpoint isn't represented at the Fed, and I would look to broaden.
Senator Lummis, your time is yours.
Thank you so much.
Thank you, Mr. Chairman, and welcome, Mr. Chairman. I have a couple questions about bank supervision before we go to monetary policy. The first one is Vice Chair Bowman has ordered an independent review of the supervision of Silicon Bank and Signature Banks, and I think that's a really good thing. I applaud her and support her efforts there. So have you instructed your staff, including the attorneys in the legal division, to cooperate with this independent review?
Yeah. So thank you, Senator Lummis. This call for a review of what happened around Silicon Valley Bank preceded my time at the Fed.
Yes, it did.
But I'm certainly aware of the ongoing investigation. And my general rule is that we should be cooperative to investigations, and we should try to get to the bottom of the facts of on regulatory and supervisory issues.
There are rumors that there may have been destruction of records by some of the staff at the Division of Bank Supervision, and of course that's a crime. So if records relating to the supervision of these banks were intentionally deleted by staff before you were at the Fed, before you ever became chairman, will you order your staff to assist in recovery of these records and cooperate with law enforcement?
Yeah, so I made a bold statement to one of your colleagues before that I was opposed to scams. I can make a bold statement I'm opposed to criminal activity. I have no reason to believe there's any criminal activity here. But I think we want to get to the bottom of an investigation. If there's an ongoing investigation and investigators generally want access to things, there's no reason why they shouldn't have access.
Thank you. I want to turn to a proposed rule that is being considered and ask for your thoughts on the proposed rule. And it has to do with the Federal Reserve Board's payment accounts. Skinny master accounts is kind of a term that's used. My staff has told me that if a doctor submits statements to an insurance company, they have two choices. They can pay 5% in bank fees or wait 90 to 120 days for a paper check.